Okay, welcome to lesson 3-2, and we're continuing on from the same stuff we did in chapters 1 and 2. And then we're talking about transactions affecting prepaid insurance and supplies. So we're going to again analyze and record cash transactions using source documents, kind of a play on what we did in lesson 3-1. Analyze and record transactions for buying and paying on account. So again, we're building on the stuff we learned in chapters 1 and 2, and then just recently in 3-1, adding a little bit, focusing here on prepaid insurance and supplies. We'll add different transactions with our multi-column journal as we move forward. Okay, so here we go. So first of all, we have this transaction, paid cash for insurance. Now, just to kind of pause here, a few things to note. Um, Don't forget about analyzing a transaction. Don't just go so caught up in minutiae. It's like, first of all, let's step back and go. We need to analyze the transaction to determine which accounts are going to be debited and credited. Always have to pause and do that. The other thing too is if you ever get stuck and you're confused, I'm not sure what's going on here, pull out a piece of notebook paper and draw a T account. Say, okay, what's going on here? We got a T account for this, T account for that. How is it all going to land in the end? You can always use those T accounts to help you analyze things, no matter how complex and difficult your transactions get. Now, here we're doing a very traditional manual accounting system. This is bare bones, but understand we are learning accounting theory here. We're learning accounting theory. In reality, these transactions would be batched. So, for example, when I was in industry, I would do a whole bunch of journal entries, have them all ready to go. I'd have a pre post report. I'd review my journal entries. I would post them to accounts. They'd get entered as debits and credits into accounts. And then I would print out or have an electronic record of all those transactions I posted. And with all the different companies I worked for, that's how it worked. Everything was batched. With the Marcus Whitman Hotel, we had transactions in the restaurant every day. So at the end of the day, we made a journal entry for the revenue, for everything earned in the restaurant from food and beverage. I should say beverage and alcohol and meals and all that revenue that we were wanting to track. We batch that at the end of the day. I could say the same thing for the cellular industry. And once a month, we would send out bills for service, for cellular service to 60,000 customers. We would batch that all those bills got sent out. We didn't do like 60,000 different journal entries. We did one journal entry for that company. So, in reality, again, electronic accounting systems are used even by small businesses with a program called QuickBooks, but this helps us learn the theory by using this multi-column journal. You have a much better understanding when you get into a QuickBooks or something like that, how it might actually operate. So always kind of keep that in mind is this is a very simplistic accounting system. Okay. All right. When we're using ruled accounting paper like this is the traditional ruled accounting paper, we don't have to enter the dollar sign or the cent sign. You can see here the dollars are going to be in the blue or to the left of the blue. The cents are going to be to the right of the blue. All right. And again, we're going to be using 4 steps in this process. So here we paid cash for insurance in our multi-column journal. All right. Check number 2. It's our source document. There's our T account for prepaid insurance, a $900 debit, the left side. Cash is credited on the right side for $900. All right. We're decreasing an asset called cash. We're increasing an asset called prepaid insurance. Remember, insurance is generally like maybe 6 months in advance. We're gonna expense that or write it off, so to speak, 1 month at a time. But it is an asset because it has future value, long-term future value. So we're gonna write the date in the date column. Now I would put in, I don't know, I would put like Jan period 3 for January 3, prepaid insurance. There's my date. Record the debit amount in the general debit column and write the account title. Okay, why are we putting it in the general debit column? We got to pause there for a moment. We're debiting prepaid insurance. Do we have a special column for that? Well, no, because we have a special column over here for sales credit, which is listed as column 3 on our multi-column journal, and cash debit and credit. We don't have a special column for prepaid insurance. So we're going to write in prepaid insurance as our account title there and put in our source document C2 for check 2 and show that as a general debit of $900. And again, we're going to know, okay, what account are we posting it to? Prepaid insurance. Now, it's very important that when you enter in that account title, that you enter in it exactly like it would appear in the chart of accounts. That's critical. Now, you might say, what if I don't have enough room? Well, then you would have to abbreviate so it would be very obvious which account you are using. Again, accounting is a very, very exact science, and one little typo or one little number that's in the wrong place, you can throw off your entire accounting system. So there's our debit. We put in account title prepaid insurance because it's going into the general debit column. Every time we put something in the debit or credit for the general columns, we have to put in the account title. We have a credit to cash, $900. We already have a special column for credit to cash. And then we write let's drag that out of the way. Write the source document number in the document number column C2, which will be our step 4. So put in the date, the debit, the credit, and the source document. Those are our 4 steps. Okay. Bought supplies on account. Now remember, when we say on account, think about, somebody owe us or do we owe them? Well, if we bought something, we bought on account, we're going to owe them later. I know we've had some confusion with difference between accounts payable and accounts receivable. Bought supplies on account from Canyon Office Supplies 220. Okay, now let's pause for a moment. Thinking back to what you remember about the multi-column journal, do we have a special account or a special column for accounts payable? No. Do we have a special column for supplies? No on that either. Okay, so what are we going to do? Well, we're probably going to be using both special columns for that matter. All right. And again, always keep the 4 questions we have. They said to answer these questions: which accounts are affected? Are they increased or decreased? Are they debited or credited? That might differ a little bit from the 4 we have on the wall there. So here we go. We're going to post this transaction. Excuse me, I shouldn't say post. We're going to enter it into our multi-column journal. We'll post later. Okay. $220 increase to supplies, a debit. Canyon Office Supplies. Now we have an increase to a liability. Remember before we had a decrease to cash, which was an asset. We have an increase on the credit side to accounts payable. Remember, anything on the left side of the accounting equation, assets equals liabilities plus equity. Everything for the left side of the equation increases with a debit. Everything on the right side of the equation increases with a credit. So we're increasing accounts payable. We now owe more money. Write the date in the date column, the 5th. Record let me get this thing out of the way here. Record the debit amount in the general debit column because we don't have a special column for supplies. So we're going to say it's 220 and supplies. So here we go. Debit 220, we write in supplies. Well, now hold on a second. When we go to our credit amount in the credit column, we also don't have a special account for accounts payable, do we? So we write in, again, we're using appropriate abbreviations so we know exactly what we are crediting. All right. And here in reality, are we going to have an account for every one of the people we owe money to? Well, maybe, maybe not, but most businesses have an accounts payable subledger. They just have one big general ledger account called accounts payable. And underneath that, they have all the detail for all of the people they owe money to. So we call that a subledger, which we'll probably get into that in future chapters. But for now, we have a special account called accounts payable, Canyon Office Supplies. Keeping it simple. Again, maybe they probably don't have very many people they have accounts with anyway. All right, so we're going to write that in as well in the account title because, again, we do not have a special column like sales credit or cash for that particular account. So we're going to write in as well, and then we're going to, of course, write the name in and the credit on the right side. So we're increasing the liability. Then finally, we're going to write the source document in to the document number M1. We just have to write it once, by the way, with the first line there next to supplies. So we're journalizing these transactions. Paid cash on account. Okay, again, I got to think about what's going on here. Well, we paid cash, we're decreasing an asset, right? We paid on account. What's on account mean? That should think, okay, we owe somebody money. If we bought something on account, we owe somebody money. If we paid cash, we're paying down our debt. That's a liability. We owe people money. We're not selling anything here. We're not buying anything here. We're just paying off an obligation. So again, you have to pause and think, what's going on when we pay cash on account? Canyon Office Supplies. We're going to debit accounts payable Canyon Office Supplies. We're going to decrease a liability. Remember, the increase side is on the right side of the accounting equation. We're going to decrease a liability with a debit. Cash, credit for 100. Cash is an asset. Cash is going out the door here. We're paying cash. We're losing cash. We're going to decrease an asset. So in this case, we're debiting a liability to decrease it. We don't owe them as much money. And we're going to decrease an asset because we just had money go out the door. And it looks like this. Write the date in the date column. And generally, by the way, we write the month in the very first entry on our page, Jan period. And until we either run out of space on that page or start a new month, we would just keep Jan at the top and we just write in the day of the month. That's kind of the way things work. You don't just have to write Jan every line down below. All right, we're going to debit accounts payable Canyon Office Supplies. We write that into the account title because it's showing up in the general debit column. So whenever we put anything in debit or credit for general, we have to write the account title in so people know this is the account we're posting to. We're going to credit the cash credit column, which already exists. We have a special column for that. We don't have to write in cash over an account title. We have a special column, so we're going to credit cash. Again, at the end of the day, assets equals liabilities plus equity, debits equal credits. Every time. Write the source document number in the document number column. Okay. Which journal columns are used to record paying cash for insurance? Record paying cash for insurance. Okay, let's pause the video. I'm not going to go back to the multi-column journal. Let's see what we can remember. Okay. Replay. We're going to have a general debit called in prepaid insurance. We're going to credit cash in the special cash column. Next question, which journal columns are used to record buying supplies on account? Do we have a special column for supplies? No. Do we have a special column for on account? And again, when we say on account, what do we mean? We mean liabilities. So no, we're going to have a general debit for supplies. We're going to have a general credit for the liability and the name of the vendor. So in that case, we have a general debit and a general credit. We're going to have to enter in the account title for both the debit, supplies, and the credit, the accounts payable. Which journal columns are used to record paying cash on account? We just did that one just a moment ago. We obviously have a special column for account, for cash, excuse me. And we're also going to have Well, we're going to have to put into the account title for accounts payable as well. What are we debiting? We're debiting a liability called accounts payable. What are we crediting? Cash, which has its own special column. So we're going to have a general debit to accounts payable. We're going to have a cash credit in the cash credit column. It already exists on the multi-column journal. Okay, that does it for the video. Then I'm going to have to pause here. Okay, so I'm going into Working Papers 3.2 in MindTap. Here we go. I'm going to go to Work Together. I got to change the scores on those. Just ignore that for now. Okay. All right. So here we go. We have 3 transactions related to supplies and insurance. Instructions, Norma Dirks owns Dirks Copy Center using information provided. Journalize the transaction continuing in the next blank line of page 1 of the journal. Source documents are abbreviated as follows: check C, memorandum M. Okay. All right. Looks like we actually have a couple of transactions already from the last chapter, I believe. Norma Dirks, receipt 1, credit $2,800, debit $2,800, putting money in the business. Looks like we bought supplies with cash. Okay. All right. So next we have bought supplies on account from Supply Mart, $600, M1, memorandum 1. Let's put in the date. I was going to put in the 5th. All right. We're going to put in account by supplies on account from Supplies Mart. So what are we debiting? Do we have a special account for supplies? No. So I'm going to say supplies. I might want to reference my chart of accounts. There's supplies. Okay. And so I am debiting supplies for $600. Let's not put 6,000 in there. All right. Well, what am I crediting? I'm crediting some sort of an accounts payable for Dirks Copy Center. I wonder if I can highlight this. I think I can. Accounts payable, actually I should say Supply Mart, right? Can I highlight that? It's not going to let me. Accounts payable Supply Mart. Do I have a special column for accounts payable Supply Mart? No, I don't. And again, close is not good enough. So I'm going to put in accounts. What happens if I get off here? So it gives me a red. Payable, supply. See, if I start going off, it's going to yell at me with red. There's the first clue. I'm going to credit it. Now, see, I went over to cash credit. Bad. I don't have a special column for accounts payable, do I? There we go. $600 credit. Don't forget to put the source document, M1. Is that what they said? What were the instructions again? Source document are abbreviated as follows: check memorandum. Okay. Yeah, it was M1. That's right, M1. Okay. And I got that as a 5th. Remember, I don't have to put the 5th again because I already put it once. Next, on the 7th, paid cash for insurance. Again, let's go to our chart of accounts here. What does insurance look like? Prepaid insurance. Perfect. I'm going to be debiting prepaid insurance using $500, debiting $500, and I'm paying cash, right? So I'm going to pay cash for insurance. I'm going to credit cash in the special cash column. Now, if I was using lined accounting paper, I wouldn't have to do all this decimal stuff, right? And my source document was check number 2. Again, when we say cash, that could be green stuff or that could be an actual check. Last transaction on the, can I pin this? Let's see if I can pull it down here. There we go. Pull it down a little bit. Maybe not quite that far. There we go. Last transaction on the 9th. I'm going to pay cash on account to Supply Mart. Okay, did I sell anything? No. Did I buy anything? No. Which accounts are affected? Well, cash, obviously. And what's on account mean? Well, when I'm buying stuff, that means I owe them money. So what am I debiting? I may be debiting accounts payable Supply Mart for $300. I'm going to be crediting cash, because I already have a special account for cash, $300. And again, the fourth step, I always use those fourth steps. What's the date? What's the debit? What's the credit? And what's the source document? Those four things. Source document is C3. All right. Once you're done with that, I'm not going to save this, by the way, but once you're done with that, you can, whoopsie doopsie do. I just skipped around there. Once you're done with that, just the only thing you're working on for this section as an assignment is on your own, page 69, and that's going to be another 3 transactions building on what we already did, I think in the previous chapter. Okay, and that's it. We're just going to keep rolling right along to chapter 3, lesson 3 after this. Reach out, please let me know if you have any questions or hang-ups, and have a great day.